Hello, everyone. Good afternoon. Ben Markins here from the Paperboard Packaging Council. We've just opened the doors. It's June the 24th, 2020, and I'm very excited that we're hosting another event with our dear friend Jeff Rosensweig to tell us about the economy and our future and our ability to feed and clothe our family. Okay, ladies and gentlemen, it's time to begin the big show. My name is Ben Markins. I'm president of the Paperboard Packaging Council, here with an economic outlook from Jeff Rosensweig. And I do want to introduce two people from Jeff's team who are on the phone. Justin, who's one of his graduate students, I think, computer science guy, who's also interning at McKinsey. And then we have Fez, who I asked him on the phone last week, are you one of Jeff's graduate students? He said, no, I'm a rising senior in high school. And so every year Jeff takes on some high school students to mentor. And I did want to say to Fez that Jeff's first ever public speaking thing was to the Paperboard Packaging Council, many years ago. And he still comes back now and is a solid friend of ours. So Fez, if you become famous, we do want you to come back. Whether you become famous or not, you can come back. But if you're famous, you have to come back like Jeff and do us a solid. So thanks to Jeff's team. Antitrust, I don't expect a lot of antitrust problems on today's call, except you know, no customers, no pricing, no stuff like that. Jeff can give all the opinions he wants about the future of the market. We would ask you to refrain from talking specifically about folding carton market, your business, what you're doing to increase or decrease volume, your opinions about whether this segment of the folding carton market will be going up or will be going down. As always, we want to thank our sponsors, our platinum sponsor, Koenig & Bauer. Usually Eric is on the phone, and if he is, he usually has a thought or two. And then our virtual event sponsors, who are Komori, Bobst, Clearwater, and Heidelberg. And then our virtual tech sponsors, Leary and Billerud-Korsnäs. So I thank all of them for doing it. I don't see Mark. I see Mark Hishar's on the phone from Koenig & Bauer. So if you have a question, we'd love to hear from you. As always, we've been updating this page, paperbox.org/coronavirus, for some time. And in fact, as late as this morning, we added some more material to it. It's also where you'll find all the past town halls, including the one Jeff did about 6 weeks ago. So if you want to be clever, you can go back and listen to today's recording and that recording and send Jeff an email if you think he made any mistakes today. And I'm sure he'll be happy to hear that. Let me just tell you about a couple of upcoming events, and then we'll get right to Jeff. So our Film Fest is on now, and we hope all of you will go. It's a very fun little easy thing to do. You'll vote online. There's a Google Docs. You'll just rate on a scale of 1 to 5. And you can go back and forth if you decide you want one better than the other. But we are having a party that John O'Neill and I are going to hold next week, July the 1st at 4:30 p.m. Bring popcorn, bring a beverage, and it should be a lot of fun and highlight our associate members. July 16, New Generation Leaders, led by Keva Sonderin and Jenny Markins. That is by invitation only, but if you want to be invited, please let us know. July 22, our nerdy best friend, Beth Zenas, with some productivity hacks for working from home, so that should be fun. But Jeff is back. You know, as you know, Jeff is an old friend of PPC, and he's agreed to do the first one, the second one, and this next one, August 19, as a favor to us, knowing what's going on in our industry. He will be at fall meeting, and he will get paid for that because he does eventually need to buy groceries for himself. But thanks to Jeff for that. Again, another redux of New Generation Leaders, September 19. And then September 16, we have Joel Greenwald, who's spoken to us before. He's a labor lawyer and has some strong opinions about what we ought to be doing. About technical and production meeting, we're going to have it virtually, August 25, 26, and 27. One day will be ops, one day will be financial executives, and one day will be HR. More to come. We're going to be sending out a survey this week. And then while it's October 14 to 16, our current plan is to hold a meeting in Savannah, Georgia, and we will only do it if it is safe to do so. Jeff is on the headline. He'll either be there personally or virtually, or possibly we'll have a hybrid with some people there and some people not, and we'll let you know when we know. We certainly have the end of the summer, Labor Day-ish, as a drop-dead decision date there. Carton Comp, we're really in the last throes of when Carton Comp can be done. We're looking for a few more great boxes, so we hope you will participate, paperbox.org/CC. So what's going to happen now is Jeff's going to go. He has a few slides. He and I have agreed that somewhere around 125, I'm going to say it's 125, and he'll wrap up. We are going to do a lightning round, which means if you want to ask Jeff questions, and he'll have 75 or so seconds to answer them. He thought that would be fun, and so did I. So in the chat or in the question, put your question, and I'll be sure to put it to Jeff, and then we'll open it up to general questions. So with that said and done, I would like to welcome PBC's good friend, Jeff Rosensweig.
Well, thank you, Ben, and we'll get right to it because I want to get a lot of questions. It is 1:08, so maybe we'll go to 1:30 with the slides. Although if I can end them early or stop them at some point, we could always come back to some, but we'll make sure we get some questions in. So the first thing is I'd like people to have a pen with them, and if they're interested in what's going on in terms of forecasting for the world economy and the big economies and even some smaller ones in the world and for the US, I'd like you to point you to two sources. One is the OECD, which is, they call them the Rich Countries Club. It's 30 big economies, but it actually includes Mexico and others. So it's a very important group. They issued some forecasts very recently. Of course, everyone is revising their forecasts as we see how the pandemic is developing or the curve is bending downward or upward. But they did something unique, which is why I'm showing it here, which is they ran two different scenarios. So we'll talk about that. We're very lucky this morning, so our timing was great. The IMF, the International Monetary Fund, announced their revised forecasts. They revised them downward as they see the pandemic getting worse in an important nation for PPC in Mexico. And of course, Brazil, it's getting worse, and now it's getting worse in India. And there's a lot of talk about particular states in the US, as you know, where the curve sadly is bending up. We're getting more cases. We're not getting more deaths, but that's a lag. People get it and then they could die later. The stock market is down substantially today. It's not crashing, but it's down 2.25%, which is substantial because people were really thinking overnight, as they looked at the data, cases are turning up in some very important states, California, Florida, and Texas, and even North Carolina, which is a very important state. So the stock market is down today. And interestingly, again, if you have a pen, I would just write down OECD economic forecast, and which is this, and then IMF, they call it the World Economic Outlook. I was just looking at it. It's very clear, talks about, Canada will go down about as much as the US is their forecast, about 8% this year, our GDP. Now, one good thing is normally in a recession, it's physical goods that people stop buying, particularly durables like cars, but also non-durables. Yeah, and we take a hit. This year, fortunately, non-durables are doing okay, and they will continue to because it's service industries, which are usually pretty recession-proof. They're the ones taking a hit now because service industries involve things like hospitality services, leisure, going to restaurants, going to hotels, flying on airplanes. That's transportation services. So I just wanted to get that right out front. The future for non-durables does not look bad, particularly, for instance, when people do not go out to the pub, they will go to the supermarket and buy 12 packs of Coke or beer, etc. And I just did that last night. And of course, that beverages, I believe, are about 20% of the business of packaging. All right, so again, the unique thing is, unlike other recessions or even depressions, it's the service industries that are taking the big hit. Having said that, I'm going to show you manufacturing in a minute, since you're manufacturers. So the beauty of the OECD is they show you two different scenarios. The lighter pink is their scenario for the world economy. They think it will decline 6%. The IMF is not that far off, by the way, their forecast. They think it'll decline 6% if we don't have a second wave of COVID start up. As you know, almost every country, especially in Europe, for instance, and in Asia, except for maybe India, has bent the curve to less cases over time. But we're all worried, as Anthony Fauci says, about a second wave once we get out of summer. And therefore, the OECD says if we get a second wave, the world economy will come down 7.5%. And the IMF doesn't have these scenarios, but they have a similar worry. What I want you to know is if you're interested in particular countries, we have a sponsor here today that's a Finnish company. We have a big Canadian contingent in PPC. You can go here and see not just the baseline forecast for the countries, but also this kind of pessimistic scenario, which may be realistic now that we see some viruses picking up. Notice the last time the world economy shrunk instead of growing was 2009, if you see that bar. But you see the world economy didn't come down very much. We did. That was our Great Recession. But China, India, and even Brazil, in other words, most of the huge emerging markets, the BRICS, they had a downturn for part of the year, but then they started growing, and that dampened the overall downturn. But then the world grew out of, and we grew out of that downturn. So you can see growth picked up to 5% in 2010, worldwide growth, as it was for a few years before the financial crisis and the Great Recession. The housing boom in the US was also a housing boom around the world, and that lifted the world economy for quite a number of years. I'd like to go to the next slide. Now, I looked carefully at what I did a few months ago, so I'm not repetitive. I have brand new slides like the one I just showed you, but this one is very similar to one I showed you because I want to show you some qualified good news. A few months ago, all the talk was about people being laid off and therefore unemployment rate going up, but also week by week, people were being laid off and they were going in to stake a claim for unemployment insurance. For compensation, if you were laid off, you can get unemployment insurance. And we went from a position where the economy had been doing so well and unemployment rate itself was at a very low rate, 3.5%, a historically low rate, and only about 200,000 people were being laid off every week. Now you might think, how could unemployment be so low if people are laid off so weak? Well, others are getting jobs. And there aren't that many people who were laid off and stayed unemployed for a long time. So the red is called initial claims. People that were laid off that week before is a little over 200,000 a week, but then it jumped to about 3.5 million when we started locking down in the second half of March. And then as we see in the title, it jumped to almost 7 million in a week and stayed up over 6 million for a week, then fell to 5 million. This is not the people continuing to get unemployment insurance because they're still unemployed after 2 weeks or 3 weeks, or they're furloughed without pay. These are people being laid off right then, that week. So the good news I wanted to show you is now we're down to 1.5 million people laid off last week, and similar to the week before. So it's not an anomaly. This comes out on Thursday mornings, so we'll see tomorrow morning, will this statistic, the amount of people laid off the week before, Will it continue to trend down? Probably, and this is very good news. On the other hand, we need to keep perspective that if you look at the subtitle, we never had a week, even when things were bad in 1982, when interest rates were very high and that threw us into recession. We never had a week that was more than 700,000 laid off. Now, because things are much better, they're not close to 7 million, they're 1.5 million. So the good news is they're down dramatically. Bad news is they're quite high. But let me give you another piece of very good news. And the president is talking about this, or his people are, and rightfully, which is if you keep laying people off every week and they don't get a job right away, then they are called people that are continuing getting unemployment insurance. We call it continued claims. They're still claiming and getting unemployment compensation week after week. So because people were getting furloughed, unpaid furloughed, and not getting jobs during the lockdown, that amount of people that were continued claims, which had been about 2 million, even when things were great, some people maybe without skills for the modern economy had been laid off and weren't finding it easy to get a job. So it was like 2 million, but then it spiked to 25 million. 25 million is because 6 million had been laid off and most of them were still getting it, and then 5 million might have been laid off and they were still getting unemployment insurance. But notice, now it's come down. It's dramatically high. I don't want to be Pollyanna, but 20.5 million people are getting unemployment insurance now, are still getting it. But that means people are getting back to work. They're finding jobs because almost 50 million people have made an initial claim for unemployment. Week by week, 7 million people, as I said, 6 million, 4 million. As people get laid off and make a claim, 50 million in total since we started hearing about this pandemic have been laid off, but only 20 million are still without work and getting unemployment insurance. Close to 30 million are back at work, and that's very good news. We can talk more about any of this, like with the job market, in the Q&A, but we'll move to the next slide. Now, we want to dig deeper into industries, and as we do that, we're going to look at the change in total amount of people working in these industries month by month. So the blue is February, how many people were working in these industries compared to January. Well, we started hearing about COVID, and in fact, by the end of February, some things were slowing down, but just barely. So jobs were being created in every major industry group. And I have in my head the others, if you want to ask me, but these are the ones where we've really seen some interesting swings. And I wanted to show you retail because it's so important for non-durables, selling through retail establishments. And of course, I wanted to show you manufacturing since you're in manufacturing. The interesting thing is in March, the real lockdown started in the second half of March. And when we look at how many people are employed or what is the unemployment rate, it's a monthly thing they report. They report it the first Friday of every month. The other thing is how many people are being laid off. Then that comes out every Thursday. This is in the monthly survey. How many people are working? 150 million maybe. How many people are unemployed? How many people are working part-time? But that week came in, that week when they do the survey, because they wanted to kind of cover the whole month, they do it in the middle of the month to get a feel for the month. So in March, things were very bad at the end of March. That's when the big layoffs started. As we just saw, that's when you started seeing a lot of people going in week by week and claiming unemployment insurance. But in the middle of the month, we started seeing layoffs. So March compared to April, the red in all these major industries, we were losing jobs in the middle of March compared to the middle of February. I think I just said April, but not that much. So when things really hit the fan was second half of March, first half of April. So by the time they did this survey in a week, like the third week of April, we had dramatically lost jobs. And we can see that here, that particularly, and not surprisingly, hotels weren't getting people coming. So that's hospitality. No one was going to Disney World, it was closed. So that's leisure. No one was going to movie theaters, that's leisure. No one was going to restaurants and bars. So that's all within leisure and hospitality. So that took the big hit. 7.5 million less people working in that sector. But the thing that was important to clothing manufacturers, furniture manufacturers, was retail trade. They lost over 2 million jobs. Now, the retail trade data include e-commerce. So Amazon was obviously hiring more people to ship out more stuff, and fortunately using paperboard packaging. But still, malls were closing and stores were closing. The supermarket component, and I believe I talked about that last time, the supermarket component was doing well, and that was good for non-durable packaging. But in general, if you think about clothing and furniture and sporting goods stores, they all closed down. Now, the important thing is flying, which was down 95%, is now down 80%, which still means American Airlines is, and I just use them because they're not doing well, is just bleeding cash. And so are the others. But we were down at 5% of how many people flew the year before. Now it's 20%. It has quadrupled, but that still means it's down 80%. Hotels are picking up some occupancy. Restaurants, as you know, are now open. So leisure and hospitality has gained back a lot of jobs. So when the president's team talked about that in the latest jobs report, the one for May that came out in early June, we had on net a gain of 2.5 million jobs. We did, and a lot of that was in leisure and hospitality. And as some stores reopened, it was in retail. The other thing it was in healthcare, interestingly, because as many of you know, dentist's office had to close, doctor offices, any kind of routine care closed, dermatologists, no one wanted to be touched. And everything was just focused on COVID patients. Everyone was putting off elective surgery, just about everything. Well, some doctors' offices have reopened, even dentist offices. They're just all wearing masks and trying to get it in your mouth. So jobs are being created as they are in manufacturing and construction. But right before we move to the next slide, I want people to be aware, if you're wondering why the things still seem pretty bad out there, we gained 2.5 million jobs in May. That's good. But we lost 22 million jobs on net in March and April. So, in other words, we're still down 19.5 million from the peak in February. So the great thing, trends are important. It's getting better, but levels are also important. And for people who make durables or who have a lot of service industries that people don't want to get exposed, they want to keep social distancing, they're still hurting dramatically. Okay, we'll move to the next slide.
Jeff, before you move on, first of all, two things. One, it's 127,
yeah.
And there's a question about construction.
Yes.
Do you have an opinion about new building construction cost over the next 12 months?
Yeah, it has come down because cost of materials were so high, because there was not just a lot of construction of new homes, but a lot of renovation. So for instance, if someone wanted to get their home, add to their home, say, they were paying almost twice as much as they were a few years before when things weren't as good. Labor was hard to get for new building construction. but also supplies, plasterboard or, everything very expensive. And some of that lumber, some of that has come down to a certain extent. And labor is much cheaper. There was such an over demand for labor. And now, there's just such high unemployment. So it could be that costs will go up. You asked about a 12-month horizon. If the economy is a V, if it really comes back, and some people predicted that the stock market has already been a V, although I wonder if it's going to be a double dip like a W. But I don't see it as a V. I think we're going to talk about that later. Ben, I'm one of the kind of Nike swoosh people that it came down fast and it's not going to go up too fast. So I don't see a big acceleration of the cost of new construction. And the main thing is we broke that momentum of rising costs in new construction when we had such constraints on labor demand. And remember, with the tighter immigration, in the past, we had kind of an elasticity. If there was a lot of demand for construction, labor would come in from Mexico. Now that's really been tightened up. So labor costs would have been going up quite dramatically if it wasn't for the pandemic. Great question. And we can continue to pursue in the other questions. I mentioned retail sales, and I did something specifically. They report total retail sales, and then they can also report, if you dig in, retail sales excluding autos and auto parts. You know that autos are so expensive that when you go to a retail showroom for buy an auto, or you go to a place and you buy parts for your car, it's normally 20% of total retail sales. Everything else, food and clothes and furniture and sporting goods, is 80%. Oh, and even food services, as they call it. And no one was going out and buying a car in April, and frankly, not that many in March. No one went the second half of March. So the red is the change in retail sales compared to the month before, not annualized, just compared to the month before. In April, it was down 15%. And I'm thinking more about non-durables. Not that non-durables were down 15%. They weren't down that badly because durables got hit. But I excluded autos because actually retail sales were down much more than 15% because autos are so important normally, and they just crashed. And maybe I'm wrong, but I thought, well, what does that have to do with non-durables or paperboard? So I took autos out just to give you a better picture of the rest of retail sales. And we saw it come crashing down, but the good news is they rose 12%. More if you include autos, because autos bounce back from such a low level. So retail sales in May were 12% higher than April. But remember, they were down a lot in April and they were down in March, particularly the second half of March. And if you look at the red, which is compared to the month before, they were even down a little bit February compared to January. I know I have to go fast, but the upshot is, what about in a month compared to the year before? So things were so bad in March and April that April compared to the April the year before, if you look at the yellow bar, was down by 1/6. Now, because of this bounce back in May, partial bounce back, we're down 6% from the year before. In other words, retail sales are going up again. Now e-commerce is up 30%, so that's a part of it. But I was just at the latest Amazon factory. This fascinates me. 2.6 million square feet, latest equipment. Luckily, e-commerce uses a lot of cardboard packaging. So the picture again is much better for you than overall, but still the news is the economy, which was so terrible, has been bouncing back. We have a little bit of a V, just I'm one of the skeptics that think things could get a little bit bad again. All right, as Ben said, we have to move to questions. We'll just move to the next slide quickly, and I'll do it quickly. Kyle, if he's on, is gonna love this. The government is spending so much that we will have probably a deficit of about $4 trillion. The earlier record was 1.4 trillion in the Great Recession, when we had a government stimulus, when we spent a lot of money and reduced taxes for a while to get the economy going again, when we faced the financial crisis after housing crashed and the Great Recession in 2008, 2009. Now, we'll talk about this in the Q&A. I don't want to be too critical of the government, because we're in the worst situation since the Great Depression of the 1930s. And we would be even worse than then if we didn't take aggressive action by the government, the federal government, through the CARES Act, for instance, to try to help businesses, through unemployment insurance that goes beyond the usual amount of uninsurance so people could keep consuming. But spending has consequences. And part of it, the government couldn't help. Tax revenues are way down because with higher unemployment, people aren't paying tax. And with corporations, many of them not making profits, they're not paying corporate income tax, profit tax. But I knew that Kyle, amongst others, would love this. 3 months ago, the government debt, the federal government debt, the total debt was huge. It was 23.5 trillion. And you can see in the middle of 2018, it was a little over 21 trillion. So it had grown a couple trillion in little less than 2 years. It was flat for a while because we had the debt limit, but then Congress took away the debt limit and we could grow. So it was growing pretty steadily as we were having government deficits, but now it has skyrocketed to 26.25 trillion. In 3 months, the government debt has gone up 2.75 trillion. Give it another month or so, and it'll be up 3 trillion. Now, again, I'm not here to criticize the government. If the alternative was to do nothing and let the economy crash and firms crash and massive bankruptcies, I'd rather do something. But we can talk in the questions, if any people on this have a question, what are the implications of this for the long run? But, in the long run, we're all dead. We had to keep businesses alive. And this is how we did it, but it has costs. Okay, Ben, let's open up for questions.
All right, Jeff. So the first 3 questions that you and I worked out, you have 2 minutes each for this category. Are you ready?
Yes.
Labor market, unemployment, unemployment insurance, future wages, and that people are making more on unemployment till the end of July. Go.
Yes. The unemployment rate that was reported came down. It's still the highest since the Great Depression, but it did come down. But the Bureau of Labor Statistics itself, in the report, when they reported the unemployment rate, said, we did this wrong. We told our people, but they're government workers, what can I say? But they counted some people as employed who are actually unemployed. They're on furlough, but unpaid furlough, and they're unemployed. They're not working. Sometimes firms are still paying their benefits. That's what Delta Airlines is doing, but they're not getting salary and they're not working. So the unemployment rate would be about 3% higher. It would be about 16 or 17%. But as in the Great Recession, there's also a lot of people who aren't counted as unemployed. They took packages and early retired, et cetera. All right, so we have a bad situation that is getting somewhat better. Unemployment insurance, and Ben and I have spoken about this in the last week or two, as he's spoken to all of you. You can make $50,000 or more in some states at an annual rate if you don't want to work right now, even if you're offered your job back, because the feds are adding $600 a week and the average state gives $400 and they are adding it. So you get $1,000 a week on unemployment insurance. And that is leading to a big disincentive. On the other hand, the feds aren't idiots. They realize there's not going to be consumption unless people have money. And if consumption is 2/3 of the demand for goods and services in our economy, if people don't have money, we are not going to have the economy keep being greased. So what is the upshot? In little more than a month,
so you got to finish up, Jeff.
Yeah, so I think after July 31st, the feds will continue to subsidize or add to the state's 400 a week, because the feds want people to have enough money to spend, but it'll be like 300. So it'll be 700 a week, because a lot of people don't make 1,000 a week, but they make 700, 800, and that'll at least get them back to work. They won't just be lying around collecting 1,000 a week. Okay, next one.
Okay, fiscal policy, deficits, debts, and taxes.
Yeah, and that's great because we're on this slide. One day, having $4 trillion deficits will come back to bite us, because it's just a mathematical formula for an individual, a firm, or a government. The total level of debt we have 1 year from now is the total level of debt we have now, plus any borrowing we do, any extra debt we take, which is our deficit. So we will have a debt 1 year from now that is 4 trillion more. Of course, some of that's already happened, as we can see, but there will still be a few trillion more. Interesting thing, in this IMF report, they say it's about the same around the world. The debt compared to our economy, which is a $20 trillion economy, 4 trillion over 20 is 20%. You know, in Europe and other places, Japan, they're also having massive government stimulus to keep their economies going. Again, I don't like it. I don't like deficit spending, but there's no choice. All right, the question in the future is, will this lead to much higher taxes? That would be very bad for the economy. And if Biden does win, and he is ahead, that could lead to higher taxes, and that could slow the economy. We won't have time, but there is a new theory, this modern monetary theory, that says deficits aren't a bad thing if people around the world like your currency. You could always print money. The Federal Reserve could print money to pay the bills. You don't have to sell treasury bonds, for instance, as long as people around the world like your money. Well, right now, people like the dollar. We are doing that. The Federal Reserve is printing money. It's holding together, but one day it could be inflationary if there's too much money out there. So we can ask more about that in the questions. Amen.
Monetary policy.
Monetary policy forces me to go to the final graph, if we can go ahead, and I can do that in 2 minutes. Monetary policy is pedal to the metal, and the Federal Reserve is doing things that was never done before. Normally, if they want to increase the money supply, they buy treasury bonds and put money out into the system. They create money, which the Fed can do. In the 2008-2009 crisis, they did something unusual. They bought treasury bonds. And again, by buying a bond, you're creating demand, which pushes up its price. So the market was kind of collapsing, and they helped it. But the market that was really collapsing was mortgage bonds. I mean, this was the housing crash. This is when the movie The Big Short came out, because everyone was shorting mortgage bonds. The prices were going down. So the Federal Reserve, rightly in my mind, stepped in and bought mortgage bonds to keep that market from collapsing, because that could have collapsed the banking system, because banks owned a lot of mortgages and mortgage bonds. All right, so that was unusual, but the Fed is doing it again. They're buying mortgage bonds and government bonds at an amazing rate. You see, before they went from 1 trillion up to 2 trillion, 3 trillion, and even up to 4.5 trillion of bonds they own. And you can see it was in 3 steps since the beginning of 2008. That was QE1, QE2, QE3, when they quantitatively expanded QE, the money supply, buy bonds, put money out there. Then they actually did the taper. They said, we got so much money out there, but now the economy's growing. We can start selling some of these bonds, sucking back up some of that money as they started getting worried about inflation. But now, of course, they've just turned on the spigot. And I don't want to criticize them. Again, we're creating jobs. The economy is holding together, and it wouldn't have, but they are just printing money. The difference is now they are mostly buying government bonds and mortgage bonds, but they announce, and they're just starting to buy corporate bonds, bonds of individual corporations. That, for instance, if a company looks like it might go broke, well, then it has to issue bonds to borrow. American Airlines just did it. What if no one wants their bonds? Well, the Fed is stepping in, or saying we would step in and we'll buy your bonds, and that'll keep the price up. In other words, it'll give you a chance to sell some debt, so you got some cash if you're bleeding cash. when the government starts buying individual corporation bonds as a capitalist, that gets me worried. But we can talk about that in the Q&A.
Okay, on to the CARES Act and other legislation. 75 seconds, Jeff.
Yeah, the CARES Act relates to that graph before that the government stepped in and spent trillions. The original CARES Act, I think, was 2.4 trillion. Democrats wanted to spend an additional 3, except Mitch McConnell and Republicans said, well, let's wait to see how the economy's doing before we keep throwing money in there, like a Green New Deal or something. But again, the downside of the CARES Act is our debt is going up a lot. The upside is the economy didn't die. It got a bad hit, but it didn't die. And I think it was kind of a fair split. Consumers got their stimulus check and their unemployment insurance, a little bit too much unemployment insurance. But firms also through the CARES Act got PPP and things and got ways to try to keep their payrolls going. So it was inefficiently done, but let's face it, it was government. The money didn't get out to firms in time. But in general, we needed it. But let's not spend $3 trillion or do like a Green New Deal till we see what we need.
Okay, Jeff, one more, then we're going to go to Q&A. We're going to choose pro sports.
Yeah, isn't it ridiculous that baseball's coming back with a 60-game schedule instead of 162? I'll be happy to see baseball again, even with an empty stadium. And the stadiums have to be empty. But do you know, 50 games in last year, Washington was 19-31, and they ended up winning the World Series. So a great team could miss the playoffs if they get off to a bad start. A terrible team that somehow has a nice winning streak can make the playoffs. So that's kind of ridiculous. Also, 7 members of the Philadelphia Phillies right now have COVID. I mean, as soon as you get these guys in spring training, it's bad news. The only thing that worries me more, and I love basketball. I play basketball. I'm dying for the NBA to come back. But, they're sweating on each other. They're breathing heavy on each other. How are they not going to be handing it back to each other? At least baseball, they're kind of apart, or tennis. I really don't want someone sweating all over me who has COVID.
All right, Jeff, we're going to live Q&A. Denny, you put your hand down, so put it back up if you want. But we'll go to Ida, please.
Ida, you are unmuted.
Ida? Well, she put a question in the Q&A, Jeff, that says, what's your prediction on conversions to cryptocurrency in China rising at a faster pace because of their use of this?
Cryptocurrencies, I still am doubtful about. And one reason I think I may have said in the past, maybe the further past with PPC, is there's so many of them. Bitcoin does, have the biggest market share, but there's so many. So it's not really clear that if we ever wanted to use something like China wants to use it for transactions because they don't want to use the US dollar because we're mad at each other. It's not even clear which cryptocurrency. They would probably want to create their own, but then how would that hold its value, not just against the US dollar, but against Bitcoin? So I'm still not really a believer that China will be able to kind of take over kind of being the world money through crypto, or that crypto will. I'm still a believer in the US dollar. And by the way, powerful people, like the guy who was vice chairman of Goldman Sachs, they think that the dollar won't be the major reserve currency, not even talking about crypto. They think, oh, the Chinese yuan or the euro. I think they're full of it. Yes, the US has this big debt. Yes, we may have inflation, which is bad for the dollar. Someday we might have inflation because the Fed, as I just showed you, has gone from 4 trillion to 7 trillion on their balance sheet. But when I hear these other people talk about the problems of the US, is you're going to hold euro, Italy and Spain and all. So I'm still bullish US.
Great, Charles Parla Greco, hand up. Anybody else wants to ask a question, raise your hand. We'll get you in.
Charles, you should
Charles?
be unmuted.
Yes, hi, can you hear me?
Yes, very well.
Yeah.
Yes, good afternoon. I have a question about the government and the Fed's involvement in buying bonds, private bonds, I mean, corporate bonds.
Yes.
Does that worry you as it's becoming a widely spread practice throughout the world where governments obviously to help these companies are buying into their assets? But I see a difference between 2008, 2009, where governments were giving loans to industry, getting paid back, where now they're buying bonds, they're buying assets, and who knows if they're going to get out of those assets. Does it not worry you that could be a fundamental change in the separation between state and private enterprise?
Charles, I'm 100% with you. And you made a number of good points. One is the risk. You know, what if the economy gets bad again and the government is holding these individual firms, corporations, bonds? Some of those firms are going to go under. They're going to go bankrupt and these bonds will become worthless. So that's going to really hit the government's balance sheet. The other thing, I don't like the way, as you say, it's getting government too much into private business. We don't have that separation. I mean, how do we know why the government is buying your company's bonds and other companies' bonds? So why are they buying? Now, luckily, your industry is doing well enough. But, you know, what's to stop them from buying WestRock's bonds and not somebody's else? And that leads to, you know, all kinds of political influence. I don't need any of that with our government getting too involved. And you're very good point, Charles. It's happening in Japan and other places as well. It started in Japan, governments stepping in, buying individual corporations' bonds. So I'm very worried about it. The government first started buying ETFs, which are like very low fee mutual funds. At least then, if you buy an ETF in a particular industry, like paperboard, you're not favoring one firm over another, which leaves a lot of room for corruption if you're favoring one firm over another. But I am worried about it. And there's a lot of talk about the government buying the stock in companies. Like, let's say the stock of Ford starts going down. The government would step in and buy some of their stock. That really scares me as a capitalist. I mean, that's the government almost taking over business. So Charles, you made a number of points, and I like every one of them.
Great, Jeff. Here's one from Jeff. What's going on with India and China and these tensions, and do you think that'll end up affecting us here?
Yeah, you know what? They've had tension 30 or 40 years ago. They even did a little bit of a shooting war. They have some disputed territories, but they really kept that under control until recently. And even though it's worrisome, you know, they're both nuclear powers and et cetera, I'm kind of happy about it. Maybe because I'm such a patriotic American, but you know, China is, you know, not just that we having trade war with them, and I think, you know, I'm very suspicious of their industrial espionage and their cyber attacks into our government as well as our private corporations. And I have a lot of Chinese students I think are great as people, et cetera, but I'm still suspicious of the communist government. And I think what China is doing is they're driving India very much into a very close alliance with us. And India, it's surpassing China as terms of the biggest population. Its economy is not nearly as big, but it's been growing faster than China's. It will continue to grow faster. And if you look at US corporations that have started to do really well, look at Microsoft. They brought in an Indian American CEO and the stock went from something like 40 to went over 200 yesterday, but more and more companies. So I think that the talent in India is so high in terms of the modern digital economy, and there's so many Indian Americans doing well at all these major corporations, that China is driving India very closely into our hands, and they've driven Japan and Australia and Philippines into our hands. And in some sense, it's good for us that we're forming a very strong alliance. So if we have a trade war with China, for instance, if we think they're taking advantage of us, or they're sending their navy too far, we have really built a tight alliance, and we're doing it.
Great. If you want to ask a real question, raise your hand. We'll get you in. We have a few minutes left, and Jeff's agreed to go over. Trade war, Jeff.
Yeah, I don't think we'll have a full-scale trade war. You know, the stock market is down today because of the reports that really started circulating about increasing cases in Florida and Texas. But the stock market had been up for a few days in a row because we're still talking about some kind of agreement with China that it's just not in the interest of a world economy that is going down now to have a trade war. You know, normally something toward free trade, we all agree as free market people, is good for the efficiency of the world economy. On the other point, the limited trade war that President Trump has with China is probably a good idea because we're so far from fair trade with China that we did need to put some leverage on them. And even by having something of a trade war, by putting tariffs, that's maybe our only leverage, hitting them economically to stop them from keep expanding in the South China Sea and threatening our allies. What does make me mad is why do we keep putting tariffs? Like we just put a new steel and aluminum tariff, I believe, on Canada. You know, again, these are our allies. Even if you think about PPC, the close relations between Canada and the US, we do not need to be getting into trade wars with, not that we'll get into a full-blown war, but to have strife with Canada. Let's remember who our friends are, as they are in PPC.
Great. Venezuela.
Basket case. I didn't even need 75 seconds. The sad thing is Argentina is getting pretty bad. Not like Venezuela, but they keep, you know, they haven't defaulted on their government bonds. They just keep saying, we'll pay you back in the future. It's the ultimate kick the can down the road. Argentina is a major economy, as was Venezuela. And this is in our backyard in the Americas. So keep an eye on both of those. One is
what are you recommending about 401ks and investments? Last time you told us your personal strategy.
Yeah, I think I want to apologize. I was going to look. I think last time I was saying don't put all your money in the stock market.
No, you said you went to cash. You went to all cash.
I didn't go completely to cash, and I didn't say go to completely to cash. I think I said take some money off the table. I took a little money off, so I was a little early. So if I said take a lot, but I don't think I did, you know, it cost you a little bit. On the other hand, I think smart money still thinks there's a lot better chance of, say, a 30% decline than a 30% increase from here. There are big risks out there. And the more, like Warren Buffett's not buying now, for instance, and not just Warren Buffett. So I was early, just like he was early selling airlines and they went up and everyone criticized him 2 months ago. Well, look what's happened to airlines in the last couple of weeks. So it still cost you money if I was early. And I still own stocks. I said keep diversified. But just because some stocks went wild recently, like the tech stocks, stay calm. Is my, you know, if you own some, don't completely get out of the FAMAG, you know, the Facebooks and Microsofts, but I wouldn't plunge in just because they're going up a lot.
EU and Brexit.
I think the EU has surprised people in terms of how well it's doing on two fronts, which is a number of the countries which were really having the first ones to really suffer from the pandemic, like Italy and Spain and even Germany, did get their act together. They had severe lockdowns and they really did bend the curve down dramatically of new cases and deaths. And their government, it's not a government, but the EU as a whole and the European Central Bank, no one thought they could ever work together, all these nations, but they did. They said, we got to stimulate the economy of the EU, just like the Federal Reserve did here and our federal government. And they stimulated the economy. So it's going to go down this year, as in the forecast I told all of you to look on the first graph, but it'll go down about like the US. It'll go down 8% this year, mostly in the second quarter. will start picking up, and Europe will. So the EU actually had its act together more than I expected. Brexit is just plain stupid. It leaves Britain on its own. Their only hope, and there is a hope, that they sign a good trade deal with the US, and they're also talking to Japan, that without having that huge open market of Europe, but being in the EU, they're trying to do more bilateral deals, maybe with Canada, but still. And of course, they blew it with COVID. You know, they didn't bend the curve. I don't feel good about the future of Britain.
Yikes. All right, so we're about to wrap up, my friends. If you have another question, please raise your hand. Otherwise, Jeff, I want to know, are you going to be teaching in the fall in person, virtually, or a hybrid?
Yeah, I'm glad you asked that, because as of this minute, we are teaching in the classroom. They made that decision recently, and I want each of you to kind of figure out your own colleges or where your kids are going, what is their decision. My prediction is almost every college will open up and have people on campus, whether or not it's a good idea. I mean, if Arizona's curve continues to look like this, I'm not sure at Arizona State, which is in Phoenix, which is really having cases go up. I'm not sure it's smart to come onto campus, or schools in Orlando, because they're going like this with the cases. But it costs universities so much, just like it costs a packaging firm so much to have unused capacity. And we make a lot of money, not just Emory, all universities, on room and board. The parents know that we charge a lot for room and board. Well, an empty room in a dorm, or a totally empty dorm, is like an empty hotel room or an empty airplane seat, which is why they sometimes sell those cheaply at the last minute. It makes no revenue. So, schools might talk about social distancing and we are in masks and not filling up the classroom, and that's all true. We're going to be super careful, but basically universities can't take the revenue hit of empty dorm rooms. And a lot of students will not pay $50,000 tuition, let's say if it's a private university, to do Zoom. So we're starting back in the fall, but we're actually going to have half the students there, let's say on a Tuesday, and half at home, and we're going to have a technician in the classroom doing us on Zoom. And then Thursday, the other half the students in the course will be in the classroom. This is obviously so we can keep them all 6 feet apart. And the people that got to be in the classroom Tuesday with me and have that extra excitement, they'll be at home on Zoom on Thursday. And again, we'll have this techie. So, just like here, people are asking me questions. Students can be asking me questions from home. So universities are thinking about this intelligently. But what happens when you have to go to the bathroom? That's going to be a disaster. Or elevator. So I'm going on, but I want each of you to know, if you have kids, and many of you do, chances are they'll start on campus. I'm not sure they're going to end up on campus. All we need are freshmen to get a little bit, goosey in the dorms, falling in love and all. And we're going to start getting things going through the dorms, and they'll probably send us all back home. So I want everyone to look out for that.
And speaking of getting goosey, Jeff, we all want to congratulate you on your pending nuptials. Thank you. And Jeff will be back in about a month, and then he'll be at fall meeting one way or another. So Jeff, if you wouldn't mind taking us out by just as you did the first time, thanking the sponsors. We really appreciated that.
Yeah, I want to start with the prime sponsor, although all are very important, but I'd like to thank Koenig and Bauer, and we have people on the call from them. And I think they've been lead sponsor both times, and it's a tough time in the economy, so they're really stepping up. But again, others are stepping up very strongly as well. And I think the names you see up here were sponsors before. I love to see, if you see this and the slide before and the slide after, how PPC really reflects a global network. We have firms in PPC from all over the world. And even if most of you from these firms are in the US, working in the US or US citizens, it means capital is coming in or specialized equipment. And that, since I'm a professor of global finance, it's exciting to me. So I'd like to thank Clearwater, Heidelberg, Bobst, and Komori. And as you all know about the quality of these firms, which is important to me in my university, that I only want to deal with quality. I don't want to depreciate the reputation of the university or myself. And here we also have two great firms, which again, I love the global nature. We have Leary, which is easy to pronounce. And then we have Billerud Kornas, which of course is Finnish. And maybe, Ben, I'll go out on that. What is a country that has its act together? Finland. Also often on the ratings of countries with the most freedom for their businesses, freedom for individuals. Finland is either at the top or right about at the top 2 or 3 out of 200 countries. In terms of transparency and lack of corruption and lack of government corruption, Finland is often number 1. New Zealand does pretty well on these kind of ratings, Canada, but Finland is also number 1. And in terms of a country that almost no one is dying of this pandemic, and yet their economy is not doing terribly. They're intelligently handling it, but we have to do business. You just have to do it intelligently. Finland's doing well. So it's a hard name to pronounce, but they're coming from a good place. And you know, everyone talks about New Zealand. Their woman leader has done a great job, and they have. But Norway and Finland and Switzerland are doing very well in terms of holding an economy together while minimizing deaths. And I know PPC has a lot of relationships with Switzerland, as with Canada. So, you know, you're dealing with a lot of the right places. Just don't have a big subsidiary, PPC Venezuela. That'll drain your budget. I wanted to thank everyone for getting on. If you find it useful, let Ben know or Lou, and we'll keep doing these. But again, I want to
questions for the lightning round. We need questions for the lightning round. We'll bring that back. Or if you didn't like it, tell us you don't like it. Hey Jeff, I think in honor of Billerud Korsnäs, I think we should say we're finished.
God, Ben.
All right, everybody. Thank you for coming.